Hey there, speculators. It's Rod, your Futures Fanatic. Welcome back to the channel. It's been a little while since I've done this, but this is going to be a rant video, so strap in. I'm also going to provide some clarifications, maybe a little tad bit of education, but I'm worried that this is just off the cuff. I'm going to get into a little bit of a rant. All right, a little bit of context. Earlier this week, Apex Trader Funding, one of the largest, if not the largest, online futures funding company, ran a sale in which they offered a $250,000 account for the price of a $50,000 account for the first month. That ended up being about $17. So a little bit of housekeeping. First of all, they have extended that sale. I'll leave the details on the screen here and in the description below because there were some issues with Trade-Evate and some other clarifications that were required. But the more important part is they've also extended the period that you can take to qualify to June 1st if you want the reduced $85 activation fee. If you're not familiar at all with this, you're walking in the middle of a movie, you can watch the couple videos that I'll lead to below. Apex is an online futures funding company that allows you to get access to trading capital without using any of your own, with the exception of the money that you pay for the subscription. So let me get into that in terms of cost. First of all, a couple comments about the 250s not being ideal accounts in terms of the profit objective to risk. Who cares? Then just don't buy them. If you don't like them, don't buy them. Feels like everyone has to leave a comment. I mean, it's like verbal diarrhea. Okay, so anyway, that's the thing. The sale's still going on. You can use TDG 9080 to get 90% off your first month, 80% for the recurring subscription for any of the programs. And if you want a special deal on the $250,000 account, you can check the other video or just know that that's for the same price as the $50,000, which is about $17 for your first month. Okay, now let me get into my rant a little bit. A couple things. First of all, I feel that this applies to everything in life, all products and services and things, but especially when you're dealing with, let's call Apex what they are. They're the biggest and the best futures funding program overall, in my opinion, because of the combination of rules and numbers of accounts and cost and price. But you are dealing with a deep discount organization. That's what they have become, okay? So they're doing a lot of volume, and you are entitled to a reasonable expectation of value for money spent. I get it, okay? So the fact that the Trade-Evate accounts didn't activate immediately, I got all this freaking hate mail info. You told me da-da-da, and I can't get my account, and I only have a few days to pass. John Skelton has addressed that on this page, which I'll leave a link to, okay? He's addressed a lot of that, as well as all the rules clarification that we'll get to in a little bit. But here's what I'm tired of. Trailing drawdown is predatory. Shut up. No, it's not. Deep discount sales are predatory. No, they're not. People like to save money, okay? Now, does Apex have a little bit of culpability, in my opinion, or maybe a lot of culpability as to have some of these scammers and issues have come up because of the policies that they've put in place themselves? I would say so. No one's immune to criticism, and I'm going to, you can criticize me for this video, leave a comment down below. I'm not a huge fan of the 1 day to pass. I think that's created a lot of these issues. I've never been a huge fan of the 20 accounts. I think 5 or 10 is fine, okay? But now they're going to be hard pressed, and the industry is going to be hard pressed to back away from some of this stuff, and a lot of you people like it. But the vast majority of people are doing their best to try to play the game or play the hand that they're dealt. But there are a lot of bad actors that they are now dealing with, okay? And here's the bottom line. They just don't want gamblers, lucky traders, windfall traders, traders that are blatantly violating, we'll get to some of the new rules in just a moment, things like allowing someone else to access your account, opening up accounts with 10 or 20 or 100 different emails, and using all kinds of VPNs and different logins and sharing logins and stuff. Now, the scale at which this is happening is starting to become pretty tremendous, okay? So given that, unfortunately, that's where they're going to have to spend quite a bit of their time. Unfortunately, again, it affects their entire customer service to a certain extent. That's where they're going to spend most of their time, not worrying about whether you have a stop on your chart, which, by the way, he provided some clarification here. So let's get a little bit to just the working orders and concerns like that, because my Discord, my comments, my email was lighting up. I'm sure theirs was, social media, their Discord, all this stuff, okay? So first clarification, you don't have to have working orders or stops or take profit on your chart. They've clarified that. You don't have to. Should you use stops all the time? Absolutely, you should use stops all the time. Should you have a trading strategy that has a positive expectation? Of course you should have a trading strategy that has a positive expectation. By the way, stick around to the end of this video. I'll go through very, very quickly strategies that we use that are mean reverting, that actually have multiple entries, which you could say, oh, this is going to violate the DCA, dollar cost averaging, which I'll get into just a moment. But first clarification, no, just don't act like a wild maniac, okay? This has to do with sizing as well, right? If your sizing is erratic, again, it's all spelled out right here on their website, which I will leave a link to down below. I don't think I need to provide much more clarification than that. Where I want to spend my time is on, and I don't know if I can find it here, like the DCA. So anyway, that talks to, all right, scaling and adding into trades. The first thing they point out is, of course, it's encouraged, and you can add into profitable positions. That's actually one of the most difficult skill sets to develop. I struggle with it. A lot of people struggle with it. We all know how to eat like a bird and shit like an elephant, which is, martingale in, double down, add more, size when we're losing. It's very difficult to, find a nice trend and to continue to add into profitable positions. We actually have a strategy that allows you to do that, but I'm not going to say it's easy to always find those particular spots. But let's talk about when it comes to DCA and what they essentially said. DCA just stands for dollar cost averaging, or essentially, scaling. We actually have at Traders Dev Group, which is my trading community, not only we have hundreds and hundreds of funded traders and all kinds of withdrawals, and a good community and a great group of people, which you can find out down below. 10-day trial for $0, no credit card required. No silly upgrades, nothing to cancel, all that good stuff. You can also look down below if you want to get my free Futures Fanatic Foundation Course, 30-video course, soup to nuts on everything futures trading, including at the very end talking a little bit about strategies for these prop programs. Check all that in the description down below. I want to provide a couple real quick mean reversion trading strategies examples, okay? So right over here, let's just do it on the Dow Jones, for instance, okay? This is on TradingView, and these are 2 standard deviations away from VWAP. On the day I'm making this video, which is on a Friday, May 17th, we didn't have a whole lot of range. We're not getting a lot of range this particular week. So generally the ranges are a little narrow. On many days, you will find that 80 to 90% of price action will actually take place between these 2 standard deviations. The key here is when it goes outside. What do you do when it goes outside? Well, this also happens to be a day in which it went outside a number of times to the upside, not by very much, except for near the close. That's not as common, but it can be common when volatility is compressed as it was today. If you want to find out all more about that, within 2 weeks of my trading room, you'll understand everything I just mentioned when it comes to understanding what volatility profiles look like relative to decisions you make on particular levels, because not every line and not every level is created equal. All right, so here in the Dow Jones, let's say that we were only short, not because of a bias or anything else, but we only wanted to be short. By the letter of the law, what they are saying on the DCA is that if you enter 1, okay, and the trade goes against you, okay, I'm trying to find an example of, it'd be right here, but all right, I have to kind of clarify what I want to point out. Well, unfortunately, here would be the best one. Right here at the end of the day, because as you can see, every short and every long just worked out. If you buy in the bid zone, cover, buy, cover, short, cover, okay? So here's the last one near the end of the day. If you get short here at this particular line, and the price goes outside the line and keeps going, you're not allowed to add. That's just the strategy. Now, where is your stop? Let me get into this real quick. I'm going to leave a link to a video that was very popular where I talked about something called a daily risk budget, okay? Everyone's all concerned about, again, trailing drawdown is predatory and everything should be end of day and this, that, and the other. Here's the problem. The vast majority of traders, and this is unfortunate, the vast majority of traders at firms like Apex are using their entire account, their entire trailing drawdown as their risk management system. That's their only risk management system. How about you do it a different way? Establish a daily risk budget, have that daily risk budget be 10%, not to exceed 10% of the available drawdown. If you bought one of these $250,000 accounts, that would mean $650. That is all that you are allowed to lose, self-imposed, and you can actually program that into Rhythmic if you want, in RTrader if you're using Rhythmic and NinjaTrader or something, or Rhythmic and another Rhythmic platform. You can actually plug that in if you're too undisciplined to actually hit the close button. If you get close to that, that's $650. On a $50,000 or $2,500 account, your daily risk budget should be closer to $150 to $250. Okay, that is. You could lose all that on one trade and then you're done for that session. You could lose it over a series of trades, okay? But even if you were doing mean reversion trading strategies like it is right here, okay, ultimately your stop is your daily risk budget. You cannot violate your daily risk budget. And in our strategies, what we're teaching is there are not going to be many times in which you need to do more than one additional ad to an unprofitable position. There are times where you're going to do that. We actually call that campaigning around a particular level. But ultimately, once you're into 1 to 2 contracts or 1 to 2 entries, you could add 2 and then another 2. You could add 2 and then even 4. So, God forbid, some people do things like that, which is fine, which is 2 as the scout and 4 at the higher level, okay? But then after that, there are no additional ads, okay? And we have a strategy that's meant to be dollar cost averaging. This is not the devil or everything that, God, I got so many emails about this. And I actually personally thought that more people in my community kind of understood that this really wasn't going to apply to us unless you weren't really doing what we teach and train on and what's working for the vast majority of folks. So again, you can read the DCA rules on there, which talk again about adding into winning positions is fine. Just don't start to buy. If you have a trading strategy, a true strategy that has more than 1 or 2 additional levels below your original entry or above your original entry if you're short, that ain't a good trading strategy, okay? What we do at Traders Dev Group is we buy or sell in the zones, okay? This is the bid zone. This is the offer zone. You go long here, take profits at VWAP. You go short here, take profits at VWAP. If it goes out, so here's a good example here. Market fell pretty quickly. Let's say you got long right here on the green lines. And again, I want to emphasize, these are really narrow bands in here, okay? Actually, let me give a better example on the Brickwicks in a live account. Let me do this really quick, okay? This is a live $10,000 account. It has $11,800 in it. I use this for tracking and training and purposes. It's a real live account. This is twice the size of a $250,000 account when you first start out because you're only given $6,500 in total drawdown, okay? Now, should anybody deposit $6,500, $10,000 in an account and trade with their entire account balance as their risk? No. You are taking advantage of these firms if that's the way you behave. And if you want to complain about the rules and things they have to put into place to discourage that, well, they let me, so I'm going to trade 10 in this direction and 20 in that direction. I'm getting my buddy. We're going to open up another email. We're going to try to do this. We're going to try to do that. You know, it sucks. Stop doing that. If you're the one of 100 people that might be that type of person, there's nothing I'm going to do to convince you to stop being an asshole. Just don't try not to be an asshole, because these bad actors can really bog down these firms, okay? And I have said on many, many videos, you don't know how good you have it. This is not quote unquote real prop, okay? I've been trading the futures markets for 31 years. I traded my first futures contract in 1993, the first E-mini when it came out in 1997, and then flash forward all the way to I created my Futures Foundation course in May of 2019, 5-year anniversary from the micros. The best thing to ever happen to futures traders is these cheap online futures funding companies, okay, with the combination of the micros. Now, unfortunately, over 80% of traders in these programs still don't use the micros. When they're trading a $2,000 account, they still want to trade the minis. And then they wonder why the trailing drawdown and some other aspects of this, or they add one S&P and another S&P 8 points lower, another S&P 8 point lower. At that point, your account's blown up. It's totally done. So what I use for demonstration purposes here is a $10,000 account that I grow every month, generally between 5 and 20%. A couple months I've done 50%. Because here's the deal, that's 50% of a real dollar amount. This $250,000 account that you have to earn 6% on, you actually have to triple. You have to get almost 200 or 300% of the actual account size. That's not easy. That's actually not even real trading, okay? But Rod, you're an affiliate. You like these products. No, they're good learning tools. They're good learning tools. And the way this should work, folks, is take advantage of the leverage that they provide to you, not on a per contract basis per account. Take advantage of the per account leverage that they provide. I said earlier in this video, I'm not a fan of 20. You can go up to 20. I would say more like 5 to 10, because if you figure out how to manage risk properly with a $2,000 or $3,000 or $5,000 account, which, by the way, this is going to sound crazy. It'll sound crazy to some of you guys. I have over here, I bought $1 million, $1 million of these I never do the 250s anymore. I don't even really pass or qualify for the, Rod, man, why aren't you on the payout list? I went and activated like 10 or 15 PAs just to get people to shut up so I could do videos that showed, PA ahead of them. But these are $250,000, the $250,000, which you can get on sale for $17 for the first month, and it renews at like $34. I'm only going to trade micros, okay? Do I have a chance in hell of getting to the profit objective trading micros before June 1st to save a couple $100? No. Here's why I don't care. I don't care for a lot of reasons, because let me do some quick math. Let's say you have to pay the $300 activation fee. Let's say it took you 3 months to pass it. So you pay $17 first month and $34 for 2 additional months. I'm really shitty at math. Is that even $100? I don't think it's even $100. Plus you add the $300 activation fee per account. Now you're at $400. I don't know about you. Again, I was an economics major. I barely made it through UCLA. But I think all day long I'd take the deal of, hey, I give you $400, you give me $6,500 to trade. Unfortunately, what it is, hey, I don't want to pay that activation fee. I want to take advantage of everything they're giving me, so I'm going to trade like a total donkey to try to save the $225. And once I get the $250,000 account, which is just $6,500, then I'm just going to gamble it up and see if I can get lucky and try to take advantage of the payout cycles and all these things. And there's a lot of content being created right now on YouTube about this. And I don't want to disparage any of these guys, but a lot of them are streaming now, and thousands of you are watching these guys stream. I don't know what you're learning from them. And have they taken hundreds of thousands of dollars of payout? Great. It's not real trading. It's not the type of trader that these firms want. And eventually it's going to probably get the whole business overregulated if this stuff keeps continuing. So hopefully you're not going to be that person. Let me back on what I was getting at here, which is this is a $10,000 real account. And the way to do these programs is to properly use leverage via the accounts. So let me show you my trade journal for my PAs. Okay, this is just one account. I don't import all 10. I just put one account in here. So this is the results I started it on this day. I've only had these for the month of May. Sorry, in this connection, this is only rhythmic. So I have five trade of 8, 5 rhythmic. So there's only 5 of these. So you take this number and multiply it by 5. When we get to the end of this month, who knows? I could have some losing days, but this is $1,452.69. That's all the commissions included. Multiply that times 5. I don't know about you. Not too bad. You don't need to be putting up some huge ass numbers, okay? And my daily risk budget on these accounts is $440. I rarely get anywhere close to my daily risk budget. And I could actually increase that daily risk budget if I traded these more aggressively, because when I'm going through the evaluations, I'll trade slightly more aggressively, not like a total moron. I said I was going to get to one more example over here on NinjaTrader, so let me make sure I do that. Let me show you, where is it here? Okay, so these are live trades. It's a live account. It starts with a U over at Interactive Brokers, okay? Let's talk about, all right, we're flat. We come in here, we sell in the offer zone. Sell, right here, okay? If this trade were to continue to go higher, where's my stop? My stop could be dynamic. It could be based on a number of different factors. But if price were to go outside this line and I continue to add, by the way, 1-1, right? I'm fine with the DCA. And by the way, these are micros, right? These are micros, okay? 1-1. Now, if it starts to go outside of this line and I add another one, not only am I potentially violating the DCA rule at Apex, which now I think is actually kind of a good thing. Now, keep in mind, they've already said they're not going to watch. If you added 1 or 2 more micros up here, you think that's going to flag anything over the course of the hundreds or thousands of trades that you might take in your PA? No, it's not. But if you added, like, let's tighten this up. If it kept going, you add 2 and add 2 and add 2 and add 2. No, just don't do that. I mean, who cares about what their rules are? You're acting like a bozo. And if you were in my trading group, right, we would virtually smack you. All right, so short, okay? Here's our target. Comes down here, touches what's called VWAP. Cover the next one. We call this line to line. Okay, we're flat. We're up some money. By the way, that says $13.50. Market is closed because I held about 6 or 8 contracts in this particular account. All right, come back up. Sell at VWAP. Okay? Now, if I were to short at VWAP here, which is not a typical entry, right? The typical entries are you get short or initiate positions in the offer zone, you get long initiate positions in the bid zone, and then you use the middle of the muck or VWAP as your mean reversion exit point for a target. I sold right here. If I add another one here and another one there, I'm actually kind of okay by the strategy as long as you're abiding by your daily risk budget. Daily risk budget should not be more than 10% of your available drawdown. So that's $650 on a $250,000 account. But I got short here. Market came back down, flat. Okay. Came back up. Sell. Again, what I'm doing here is a little different. I'm using what's called situational fluency. The situation in the markets at the time that I'm making this video over the course of the week of May, that started like on May 13th, if you will, is we had mostly kind of melt up environment and very, very narrow ranges for a lot of the trading session. So given that, and that price is not getting up to the offer zone or to this line up here, I'm getting short right here. Okay. Sell. By the way, I want to emphasize you made it this far. I really, really appreciate it. I know I'm starting to ramble a little bit, but this is the educational part of this. And if you really want to learn how this works, please do consider a 10-day trial. There's no credit card required. There's no upgrades. There's nothing to cancel. And you get access to literally everything except for Discord. Okay, you get access to everything except for Discord and a few indicators. But you can get these indicators from a lot of different places. All you really need is an indicator that's providing 2 standard deviations from VWAP. So sell, short, cover, flat again. All right, now we come down. Now we're long. All right, then we go outside this line. Okay, what if it continued to go down, By the letter of the law at DCA at Apex, I can add one more. By the way this trading strategy works, if you add one when it's outside the bands, you're not doing the right thing. If you want to call that a rule, you put the sticky note up there, whatever. Thou shalt not add to trades outside of 2 standard deviation bands. We have some people that go, well, I'm just going to add a 3rd standard deviation band today. Now the 3rd standard deviation band is going to be my entry. No, don't do that. 80% of price action takes place between 2 standard deviations during the cash session on the S&P. That's been back tested for almost 20 years. I don't know about you, but does that mean that buying or selling, shorting a 2 standard deviations above VWAP or buying 2 standard deviations below VWAP has an 80% chance of success? No, that's not how math works. I'm simply telling you that that's not how probability works or statistics or even the data. The data I'm providing you is that 80% of price action is taking place between 2 standard deviations. That little fact alone puts these trades in your favor in terms of their probability of reverting back inside the range. So now I'm long here. If I were to do an add, I'd be violating the rules of the strategy, if you will, but not the DCA. Comes back up. Look, I didn't even take target here. I was probably resting a target at VWAP, which we didn't get to. Comes down again. I did not even add here and here. Okay, market was starting to really fall apart. Okay, now any add down here, you could instantly say, you know what? You are absolutely breaking a rule. Well, watch me about to break a rule. Okay, but remember, I'm still allowed to do that add right there, that DCA. Okay, I'm still fine according to the rules. And again, remember, my P&L during this session is profitable already. Okay, I'm not. This is not erratic. Look at all this time that went by where I didn't do a single other add. It's also the nature of the behavior. You can see it in the stats when risk managers review things. There's a difference to even if I added a couple more, which I'm about to do in just a bit, okay, and by the letter of the law, they could call me out on it and by the way, this is my live account. It's not an Apex account, but I'm trying to give an example. If it was an Apex account, I would still be fine with this. All right, here we go. Look at that. This one, I've just done 2 adds to an unprofitable position. Am I going to lose my PA account? No. And by the way, I don't think Daryl or John are going to watch this whole video, but maybe I'll cut this little clip to them and they'll go, well, I don't know, Rod. Breaking rules. I think I would be okay. All right. cover, cover. I covered right away, right away, because it was an unprofitable position. Now just believe long, just one at this point. And now this add here is totally blessed. It's blessed. You can add to profitable positions. We got back up and we started to create a series of like little higher highs and a little chop channel. So I added and I added another. Then I took one off. Then I added another. Then I took a few off. Then I added one. And then the market closed. All right. Hopefully, if you sat through all that, you don't even have to. Again, I could teach you this strategy in 30 seconds. Buy this green line, sell it when it hits here. Short this red line, cover it when it hits here. If price goes against you outside the bands, don't do any more ads. Look for what we call a graceful exit. That's a whole nother video. I'll leave a link to that down below. Way that you can mechanically, systematically, and repeatably actually let your winners run and cut your losses quickly. Because if a trade quickly and significantly goes against you, the only thing you should do is switch into mode of how can I scratch and get out of this trade? Not where is my next ad? Okay? And again, this is only oriented towards kind of a mean reversion stuff, which a lot of you might not do at all. You might be breakout trader, you might be a trend follower, or you call more like scalping, where you're looking for chop channels and things like that. There's lots of ways to make and lose money. I'm going to make an argument that for small account trading, which is what these prop programs are, mean reversion for most personalities eventually, because a lot of people fight me when they first get into the group. They're like, oh, no, market's trend. I got to find the trend. I have to have a bias. I got to catch a big piece of the trend. Okay, that's fine. Okay. Here's the problem with that. There's not a whole lot of backtesting probabilities on those kinds of things. You can most easily, and this is from a guy that's developed strategies for 26 years, mean reversion is one of the easier ones to actually validate and backtest, okay? Because it has also a lot fewer entries and because you need price to get to extremes before you're even interested in getting inside the market. So you're not dealing, across a moving average that gets hit quite a bit and all kinds of stuff that's very, very difficult to, Rod, you can run a back test on any straight. Yeah, sure you can. How you can. And then how well do those results end up looking like in the real world? When then you walk forward test and you're like, shit, what the hell happened? TradeStation told me that this was going to have a 62.6% winning. And I start to trade it and the wheels fall off. All right. Anyway, spent a lot of time here. This video has gotten super long. How long is it? Probably like a half an hour already. We'll leave you this. Sale is still going on. TDG 9080. Don't buy the $250,000 account. It's your first time ever here, whether it's $17 or not. It's not the really appropriate account for most people. Just buy the smaller ones, 25 or 50. Buy a few of them. Check out my trade room. Sign up for the Futures Fanatic course. I really want to help as many people as possible. There are a lot of people that are enriching me by buying a lot of these accounts, blowing them up, resetting. Okay, I've said this before. I'm not going to give you your money back, but I would love you to come in and figure out how to do this a different way, where you can actually spend a ridiculously low amount of money on these programs and lower your stress and make some progress and feel better about the time and effort that you're investing in trying to hone this skill of trading. All right, that'll be it for now. Please do check the descriptions below, because there's a lot more detail that John and his team has put into to sort of dissipate all this misinformation and nonsense. If you do it the TDG way, or if you do it any way like I just described, establish a daily risk budget, use high probability entries, and make sure that you have a trading strategy that doesn't really have any additional levels that you should even get involved in. Because if you're doing that, you're going to probably have trouble regardless of the program and the rules of that particular program. Stay green, trade like you mean it. Thanks for watching to the end.